Over the last couple of days, I've been talking a lot about my leaps efforts, my options plays on with Tesla. And of course, that leads to people asking the question, Randy, what are leaps? How do I do that? I'm not going to recommend this for everybody. However, I do have a method. I do have a system. The system was extremely profitable for me back in the heyday, which made me a genius. And in 2020 and 2021, but maybe I'd be the same genius this year. Maybe I'd even do better. Maybe I'd do a lot worse. But I came up with a method. You can listen to the method. You can play around with it. Takes, you got to be willing to invest at least a couple of three, $4,000 in order to really try leaps. But if you've got a couple of $1,000 you would maybe like to go to the casino with, roll the dice, start playing around with it, and see if you're any good at trading. Great. The other side of leaps, though, is that if you really want to do it the way I did, and it became a full-time job. I mean, I was watching the market all day long, always checking the pricing, and I did that for a full year. Yeah, it was worth my time, but it was also yeah, what would the word be? Heart thumping, because you're always like, okay, is this a good time to get out? Okay, is this a good time to get in? And so it is not exactly for the timid. But anyway, I buy leaps, and I buy out of the money leaps. What does that mean? Well, LEAP stands for long-term equity anticipation securities. And I guess you could buy leaps that would be not call options. I guess you could buy puts, you could buy whatever, as long as it's long term. And long term for me means over a year out. Now, let me say right away before we get into it, I am not an investment advisor. And for me, I only play leaps, small ball. That's it. I only play small ball, not small amounts that I can afford, not only just afford to lose. I like to think of it as if I lost it, it would be the same as if I went to Vegas and played around for a weekend and I lost it and was like, oh, well, that was just what I went with. I had that much in my pocket to lose. As with any kind of situation like this, if you're going to get serious about it, then that's another level, and that's not what I'm talking about here. If you want to get serious about it, you need to watch a whole bunch of videos like these to find out other people's opinions on this. Or maybe you'd want to do that anyway. Anyway, my investments, as I mentioned yesterday, just to be clear, our largest investments are in real estate. We have my businesses, Tesla stock itself. I have a little bit in ARK and in Tesla, TSLY, which is an ETF that does a little bit of options playing. Like I'm going to recommend here. They do it a lot more sophisticated, but the way that they do it, they're paying like a 75% dividend, and they pay it every month. 75% per year annualized, and they pay it every month. So seems like a pretty cool thing. But I have a little tiny bit of Tesla, and I have a little tiny bit of ARK-K. I've had some ARK-G from time to time, but these are like so small as not to be worth even talking about. So, but the leaps, yeah, it's bigger. It's in the middle. It's not as big as the other investments, but it is a not substantial amount of money. Okay, so I also think that leap out of the money leaps is a very simple and uncomplicated way to play options. Options playing can be very, very sophisticated and very, very not simple, very complex with what they call spreads. And I can't even begin to tell you all the things. You can sell puts and buy calls and sell calls. And I mean, and it goes on and on from there. Very complex, requires years of study. And you might want to do that. There's plenty of people that make money on options. It's probably, I'm going to guess, maybe almost everybody that's on the channel as that I talk. So Nicholas Gibbs and Bradford Ferguson and CERN Basher. I'm guessing that Larry Goldberg for sure. Like I know, and Brian Wang, all play or have played, I can't say specifically exactly, but I know that they're all doing something with options. But this is just Randy. Okay, this is Randy. So it's simple, uncomplicated, not the way they do. They're probably doing way more sophisticated things. All right. I'm sharing this only because it's simple enough for everybody to understand. And it might be able to ramp up your leverage without using margins. People that are, especially people that haven't been playing the market for a long time, once they get a little taste of it, they're like, well, why couldn't I just borrow money to do this? Well, there's reasons why that is very, very dangerous. And in the case of options, call options, long-term leaps, out-of-the-money leaps, whatever you play in this regard, the only thing you can lose is everything you put in, not more than. Okay. Anyway, so leap is an option. I only play calls. That means I'm betting that the stock is going to go up. That's the only thing I know how to do. I have to think in terms of the positive. As the stock goes up, so does my option almost always, but there are times you can check out other videos that'll tell you about there's times when the stock might go up and your option doesn't or it goes down. It's very rare, but it can happen. Why does that happen? Well, because people that are betting on the stock going up in the future might, on any given day, decide that even though the stock is doing well today, in the future, it's not going to. So there will be the reason. All right. As I mentioned, I only buy out of the money. Now, what does out of the money mean? Well, that means that it's not close to the current price. So today, Tesla's selling for 420. I'm talking about buying leaps that are in the 700s. And I think, we'll talk later. I'm right now trying to buy an 800 strike point. That would be the value of the option that I'm taking. My optionality is, okay, so if Tesla's selling for 420 now, let's say it might cost me $910 to buy a $710 strike point. That would be out a year and a half or 2 years. All right. 2 years, actually. I think that's the January or the December 2026 is currently selling for about $91. Okay. So you're guaranteed now, you pay your $91. Well, you pay 91 times 100. So you pay $9,100. You're guaranteed to be able to buy 100 shares of Tesla for $710 on that day, on that December 16th, whatever the day is. Even if they're at $1,500, if the stock is selling for $1,500, you can still buy it for that $710. You get to buy it, and then you can turn around and sell it same day for $1,500 if you want to. Of course, if the stock is trading for $710 on that day, the value of the stock of the option will be right around 710. So you would have made 15 times your money while the stock doesn't even double. I'm sorry, I did that earlier, and that is incorrect. 91 times up to 710. So you make about 7 times, about 7 or 8 times your money, while your stock would have only doubled, less than doubled in that time. Okay, and that's kind of the nature of how options work. So let's say the stock is trading at 1,000 on that date. You'll be able to sell your option for, say 996, some number close to the actual value of the stock. Now, the other side of the option is that they depreciate over time. Okay. The closer you get to the date, the value of that option goes down because the longer out it is, the more chances there are that it's going to get to that number. The closer you get, there's less chance that you'll get to that number. And so the value of the option drops. So that's just part of the deal. And in fact, if it's lower at the time of the strike date, if it's lower than the strike point on the strike date, then the value of the option will go to zero. Okay, so that's how you can lose everything. I never ever do that. Well, okay, I have once or twice. I've allowed them to go to zero. But more often than not, what I'm doing is, we'll talk about it in a minute, is trading them inside the time of the optionality. So, for instance, we just talked about you buy the 100 shares right now, $91 a share, $9,100. Now, maybe that's too rich. So you could go a shorter term. You could buy in June, for June of 2026 instead of December of 2026. and I'm sorry, June of 2025 rather, and you could get for $22 a share, $2,200 all in. Now that isn't a leap because it's only 7 months away. So that doesn't count as a leap. It's way more risky because you got a shorter period of time that it's going to happen in. And in order to be a leap, in order to do it my method, which is always leaps, always more than a year out, then you would be, doing that. So I'm currently trying to buy a June 2026, so a year and a half out, at a strike price of $800. I'm hoping to pay no more than 50 bucks. My goal is to either hold until June of 2025, unlikely, probably not, or probably sell sooner if there's a potential short-term advantage, just like I did yesterday when Tesla ran all the way up so fast in just one day. I'm like, okay, I think I could pop out right now, grab my profits, and then pop back in a few days from now, maybe 10, 20 points lower if the stock dips. Now that's where the risk comes in. Maybe it just continues to go up and you missed out on that opportunity in that spread. Well, that's where you get into some rules we'll be talking about more in a minute with regard to your emotional state. Anyway, so very common with leaps. You will lose a bit. You turn them, okay? You turn them over. So maybe you're 6 months into it, 8 months into it, the stock has done well, the option has done well, you're ahead 25, 35, 45%, whatever the number is, and you're like, you know what? I want to get further out again. I want to move, instead of being 12 months out, you started out at 18 months, but now 6 months has gone by. You're now only 12 months out. You're like, okay, I want to be back to 18 or 24 months out. So you sell and then you buy back in. Now, when I sell and buy back in, I try to buy back at a lower price. I try to do it at a time where I think I might be able to at least pay for the difference in the bid and the sell price, which is going to be, maybe $2 or $3. Okay. So you're going to pay for that difference right there. So you're trying to maybe find a slot where you can make that happen. If you can if you can sell it at this price and buy it back $10 lower, then of course you've made a profit on that exchange. You now have money out, for instance, you have money in your pocket to do something else with, or you are holding more options for the same price as you had before. All right. My thinking about all of this is that I have plenty of time to be right. I have to have a very high conviction with regard to the future of the underlying stock. I have obviously huge conviction on Tesla. If you don't watch this channel, or if you do watch this channel, you know about my conviction on Tesla. So do I think it'll be at 800 in June of 2026? I think it'll be in 800 probably by the end of next year or early 2026. So my feelings about the stock going up are very, 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 very high conviction. That is the best time to play options. Is when if you have 99% conviction, that's when you should be playing an option. If you're saying, oh, well, I think it might go up, well, that's not a good time. All right. All right. But I want to have time. I want to have time for my conviction to play out. All right. We want to know that even if they execute perfectly, you got to keep this in mind. Even if the company executes perfectly, the market is weird and may not play logically. But within 18 months or so, typically that will even itself out. And at some point, you'll be able to get back in. Now, what we saw over the last 3 years is that wasn't true. We had the stock go from $410 all the way down to $110 and then back up to 300 and then back to 180. These wild swings are also great things, great products, great underlying stocks to use for leaps. However, as you can well imagine, if you buy in at 300 and it goes down to 180 and stays there for a long time, then you're going to be sitting there not able to sell it because it's not going to be worth as much as when you bought it, and it's going to be leveraged. So it's going to be 3 or 4 times worse than if you're just in the underlying stock. That's the only complication in playing leaps is if you get in at the wrong time, you're leveraged down, just like you're leveraged up when you do buy at the right time. All right. So as I mentioned, in 2020, I was a genius with a 33 times return on my money. In 2022 and 2023, not so much. In 2024, so far, doubled my money because I'm not in and out every day like I was. I'm not playing it every single day. I'm playing them way longer term. In fact, this is the first time I've sold leaps since, other than the ones, just selling, buying and selling a little bit in between. But this is the first time I've sold leaps in a long, long time. So I'm not in and out. I'm thinking I might be a little more in and out right now as we take the next leg up. So there may be some opportunities to buy and sell, but I'm not going to get back in that day trading. All right. So here are my rules. Are you ready for the rules? Okay. Number one, I only do companies I love and expect to do amazing in the future. I recommend you have to be totally, totally believe in them fully 100%. No chance they're going down. They're just going to go up, up, up. Okay. And then, of course, they can still go down for 3 years, right? Okay, number two, only companies that have volatility. As just mentioned, Tesla has massive volatility. Yeah, you can do it with any stock, but if the more volatile they are, the more likely you are to be able to pick these bottoms or pick some kind of a bottom and play it up a little way and then sell and then, wait for the next opportunity to buy in. Sometimes though, just realize, like right now, I sold it 418, 417, right around there. Okay, the stock then went up to 430. Now it's back to 417. So if I get back in right now, I'm going to lose 2 or 3, percent because of the transfer, the buy bid and sell situation. And I might even 3 weeks from now, it might be at 430 or 445, and I go, you know what? I want to get back in anyway. I know I'm paying more. Doesn't matter. Always look at it as the very first day. We'll talk about that in a minute. Okay, I only do it 12 to 24 months out, usually in terms of buying them, never less than 18 months out. And then when they get closer to 12, I churn them, I turn them over. I sell and I buy in. Number four, I only play with money I can afford to lose and don't particularly care if I lose it. I mentioned that before. That's the way I play. For me, I would say I certainly probably would never be buying at a level over $10,000. And I would usually probably take profits and just put them right into Tesla stock if I had more than $20,000 involved. That way, it's not that much of a killer if I lose a lot. Okay. Number five, I play well outside the money, as mentioned. Number six, I try to pay under $30. So I would rather buy 200 at 30 and spend 6,000 than to buy 100 at 60. So that's just me. I like to pay a little less. Don't know why. It's probably psychological. I take my when winnings off the table. And then, as I mentioned, put it into the original stock. And again, it never allows fear to take over. One of the reasons I'm, try to keep it under $20,000, closer to 10, 12, whatever, somewhere around there, is I don't want fear to be a motivator. I want it to be play. I want it to be fun. And you start getting 25,000, 30,000, you're like, okay, anyway, you get what I mean. Um, Almost never sell at a loss. That's one of the keys to winning in anything. Just don't sell at a loss. I think that's something that is very smart. Sometimes it's going to be at a loss, and that's going to happen once in a while. But sometimes it's okay just to take a small profit. You may, put $8,000 in, 7,000, 6,000. Let's say you put $5,000 in, and a month later you've made 500. Well, that would be 10% a month. It's 120% a year. So it's not wrong to take your $500 and say, man. And again, maybe you take the 500 and buy Tesla stock with it, and then you take your original 5,000, put it back into a leaping. I don't know. Or you just say that was fun. I'm not going to do that anymore. Okay, number nine, I make the same mistake over and over again. I don't have the courage of my convictions. I sell when I see a little profit that's too good to pass up. See, this is the opposite side of it. And then I could have waited and done much better. Well, okay, that's the flip side of what I just said a minute ago. You can't let that stop you. You can't be going, oh man, I didn't, like yesterday, I sold it 417, it went to 430. And okay, well, $13 a share times four, that's real money that I left on the table yesterday. Can't worry about it. When is the next opportunity? That's all I can think about. Got to think about that. That's what I got to do. All right. Okay, number 10, study the company and the stock. That's why you're here. Understand their vision, their management, the fluctuations, be paying attention, be real about their risks and their opportunities, and what it might be in the future that could hurt them. Be realistic and do your homework. That's the big advantage that we have. That's the advantage you have by watching my channel, is we have information arbitrage. There's no better arbitrage in the world, okay, than information arbitrage. If you know more than the vast majority of the people playing the stock, then that is your advantage. If it's a 1% or a 2 or 3% advantage, maybe it's a lot more than that. And I think you're probably already aware that our understanding of robotaxi, our understanding of Optimus is far greater than the understanding of most of the people that are investing in Tesla and most of the people on the street. Otherwise, the stock will be at 800 or 1,000 right this minute. Study the economy and the market. Be prepared to adjust to the news. Same thing that's why my channel does it the way we do it. That's why 3 times a day we're talking about what's happening with the economy, what's happening with the broader market. Why is the economic situation impacting the market the way that it is? I'm not always right, but I'm bringing in millions and millions of experts. I'm reading all the articles all day long, and I'm bringing these people to you, and I'm sifting through it and trying to grab the stuff that really makes sense. And I'm bringing you these experts, these people within the community that are experts in their own fields. And between all of us, what we're trying to do is understand the broader economy, the broader economy's impact on the stock market as a whole, both the stock market, the macro, and the economy's impact on Tesla as a company and on the stock. And if you get all 4 of those right, or even close to right, you will have arbitrage, information arbitrage. All right, number 12, watch for news on the company. Be prepared to move. And that's, again, every single day, I'm bringing you what I think is the important news. I'm not going to bring you news about the fact that they changed the hubcap on the Cybertruck. That's not my channel. I'm not knocking it. That's Dylan, fantastic. I love his channel. I probably watch his channel more than anybody else at this point, because sometimes I want to see that stuff, but I also want to see what he's thinking and what he's saying. But in general, I'm not going to talk to you about the hubcap unless I think it's going to be a major impact on sales. Then I might. All right, number 13, every play is a new play. Every day is a new day. Every time that you make a decision or you're thinking about a decision to sell, or you're thinking about a decision to buy, think of it as if you had never played before. Don't take into consideration the losses you've had. Don't take into consideration the gains that you've had in the past. Don't think about where the stock is, in terms of whatever, historical, what's happened historically, what's happening in terms of new things coming out, where are the catalysts, all of that kind of stuff. But if this was the first day you'd ever bought Tesla, ever, you'd never, ever even thought about it before. And you went, okay, let's take a look at Tesla. All right, would this be a good time to buy? That's what you do. Or flip it. Okay, I've got all this Tesla. Is this a good time to sell? Do I think there's a greater likelihood that there's going to be some people taking profits and the stock's going to go down 20, 30 points or 20 or 30%? Is this a good time to sell? Or do I think that the upside opportunity is greater, or do I not want to be bothered? The Stephen Mark Ryan approach. Just don't ever sell any. Yeah, it might go down 30%, but then it'll go up 60%. I don't want to be bothered in the middle. That's a perfectly legitimate way to play, okay? And believe me, that's what I do with my basic stock. We haven't sold it ever. Not one piece. All right. Number 14, regrets are for suckers, and never cry over a profit. So if you don't get the profit you might have, never mind, move on. And regrets of any kind are for suckers. There's just absolutely no benefit to thinking about what you could have or should have or didn't or could have. I could tell you stories. I could have bought a house in the north part of Santa Monica, one of the wealthiest areas in the entire country. I could have bought a house there in 1974 for $39,500. And I bought a townhouse. I'm sorry, it was 54,000. I bought a townhouse about 5 miles away in Culver City for 49. about a $5,000 difference. The townhouse in Culver City today is probably worth about $1.2 million, and that property in Santa Monica is worth about $7 million. It sounds like I have regrets, right? It's just a fun story to tell you. Oh, I bought the house in Culver City. Anyway, number 15. Your first investment in any trade should be less than half of what is available so that you have some dry powder to take advantage of averaging. So it's always nice. It's not always going to happen. Maybe you buy and then you buy again, and now you're out of dry powder. So you've been able to cost average one time, and you don't have any more dry powder to cost average after it went down again. But that's a kind of a good strategy on the first buy, at least. If you can do it twice, great, even better. All right. Right now, I'm playing Tesla Leaps, but I'm not day trading. I'm just figuring out how to make a little bit of profit, or maybe a lot of profit if we have a big win like we just did. As I mentioned, 100% profit over 5 or 6 weeks. With these wild swings, there's always a really serious likelihood that it could happen. As far as finding the current prices, now how do you do this? Okay, Randy, I think I could scrape together $5,000 or $4,000 or $3,000 that I wouldn't care if I lost, and it'd be fun to start doing this kind of thing. Well, how do you actually do it? Well, I'm not even sophisticated on that. So I would say that you go to your broker's website, you find the call options. They will have the spreadsheet, the sheet that shows you all of the different chains, they call them. And you need to learn how to use it. And there's probably a video for every single brokerage. There's probably a video someplace that tells you how to look at options and how to see the bids, how to see the asking price, the bid price. And then to understand how to buy it, how to place the order, etc. So that's not for this channel. That's for somebody else, but it's not going to be that hard. It's not. But one of the things is really out of the money stuff sometimes isn't showing, and so you might have to find a way. Like for instance, my brokerage right now is only showing Tesla up to about 710, but you can buy options that are even further out of money at around 800. So then you have to be able to plug that into what you're trying to do. Anyway, so those are some of the kind of things that gets a little more technical that a couple of more videos with regard to your specific brokerage would probably be helpful. All right, so this is, in case you don't know, this is Randy Kirk. And if you liked any of that, if that was useful, if it was beneficial to you in any way, if you think you might do it, hit the like button. Even if you don't think you'll do it, but you kind of thought that was interesting, hit the like button, hit the subscribe button, hit notify because, tomorrow morning we're going to have, what do we have tomorrow morning? Oh yeah, we got Warren Redlick all weekend. Well, Warren and Brian Wang. So those will be great over the weekend. This is so Friday. I missed Friday, right? So it's Larry Goldberg Friday night. And some Brian Wang on Friday night, Warren Redlick on Saturday morning and Sunday morning. I mean, how much better could you ask for than that kind of a lineup? And then of course you're gonna want to get, well, I've got it on the floor over here. You're gonna want to get your Cybertruck bottle opener. If you haven't done that yet, we are starting to, get close to Christmas here. So 25 for one, 45 for two, 65 for three. $80 for four, and then multiply $1 million times $5, and that's how much. $20 times $20. No matter how many you want to buy, $20 from there on, and yes, 3-day for anything over two. For anything over one, they're going to be going out 3-day USPS. So you got plenty of time between now and Christmas, but why cut it any closer than you already are? Get your order in now. Let me know whether you want the stainless or the camouflage or some combination in terms of the look of the product. What else I got to tell you? Oh yeah, earlier tonight, Bradford Ferguson would have been, I believe, on tonight. So you want to go back and check that out if you haven't already watched Bradford. Okay, that's all I got for you right now. It has been great. Oh, your comments, your questions, any of that can all be below, or if you're watching on X, put your questions on X. I'll be happy to take care of them. It's been great talking to you.